Q4 2025, insurance company in Nigeria made 2.3 trillion naira. Beat that. That's not even the gist. Look right and look left. By July, some of these companies may not exist anymore because of the insurance recapitalization process happening. Recapitalization process is beautiful, but it has its pros and cons. The good part, some companies would meet up with the requirement, make more money, earn more, you will see their revenue grow, and this would affect their stock price. In today's video, I would explain the recapitalization process, how it affects you, how you can make money from it, how you can lose money from it, the positions you should run out of and avoid so that you will not see minus 50%. Hi, my name is Deborah. I'm in your life so that you can invest smarter, laugh harder, and ball harder. If money matters to you, I got you. You are in the right place. Let's jump right in. What is recapitalization process? NAICOM, the body regulating insurance, has mandated that insurance companies need to meet a requirement. For some people, for some companies it's 15 billion, for some it's 30 billion. Also in this video, I'll recommend top insurance stocks you should look out for in 2026. The body regulated insurance has mandated that they raise more money, more capital to tighten their system. Now, some companies would meet up and some companies would not meet up. Here's the gist. For some companies, they have to raise 15 billion, for some 30 billion, depending on the kind of insurance. For life insurance, it's different from health insurance, depending on the kind of services they offer in full. How does this benefit you as an investor? I love to hear it. When recapitalization like this happens, it causes companies to stand on their feet. They go out and they raise more money. When they raise the money, it is an addition to the company. Most times when they use this money well, you could literally see the stock price times 2, times 3, or times 4. It blows the stock price up. I'll give you instances. The banking industry also went through a recapitalization process, and you see the re-rating of banking stocks like GT moving from 44 at public offer to 130 today, from Zenith moving at 35 to 120 today. These are part of the result you'd see with a recapitalization process. If you miss buying big banks, Zenith, GT, while insurance sector is not a bank, of course there are two different sectors, you may want to try getting into a solid insurance company. Before you proceed, please like this video and say thank you there in the comment section, because I'm so nice and I'm going to recommend top insurance companies you should look out for. Yeah, I'm that nice. You're welcome. The number one leading insurance company is Custodian Investment. Yeah, I know you are like, insurance, custodian investment. So the thing is, most insurance companies, when you say, take this money, insure my car, insure my health, so they do not keep that money in their bank account till they need to pay something about your health. They invest this money actually. So when you have a claim, they pay you from proceeds of investment. So it depends on each company. The percentage each company invests is different. So for some would say, okay, let's invest 40%. Some would say, okay, let's invest 60%. It depends on the company and how they choose to do it. Of course, they hold some cash for danger because their business, risky, is a dangerous business. Okay. So Custodian Investment is an insurance company, but they've grown so much now that they've outgrown going to give their money to people to invest for them. They now also have a part of their business that is also doing investments for people. Custodian is the number one and top leading insurance company that you do not want to miss out. If you see Custodian Insurance under 75, please jump and buy. At the point of making this video is around 70 to 73. In the next 2 years, even leave the insurance noise. In the next 5 years, you'll come back and thank me for buying that stock. Yeah, you're welcome. The next insurance company to look out for, I'm not really a fan of name and I've not really sat with their books, but for Custodian, I've done a lot of research, sat on their book. If you like to look out for a penny insurance stock, you might want to consider M Benefits or Consolidated Hallmark, Con Hall. These two will benefit from the insurance rally, and these three I mentioned, there is very high possibility that they are going to meet up with a recapitalization. Custodian is a league of its own. That one, it has met up. They have more than enough money. And benefits and con all, I believe they should meet up. So for companies that do not meet up, they will be forced into a merger. So that means a bigger company like Custodian, which I see happening, will go and buy more companies and form a merger, right? I would not want to advise on the rest of the insurance companies. If you really want a penny, you might consider Veritas Cap. If it looks like they will meet up to, well, to be safe, I'll just stick with Custodian and benefits con all. But if you love to be more risky, and after doing your own research, you could choose Veritas Cap. Please note that this is what I am sharing is from my own POV, from my own lens. It is not financial advice. Catch a call. Good job. Deadline for this insurance recapitalization is the 31st of July. So if you want to buy any insurance stock and seats, you should be buying now. In fact, at the point of making this video, if you've not taken position in any insurance company, you should actually make your own research and pick one now. Buy, put your investment, cross your leg and watch it flourish. We are expecting a run. Last year, a run happened around July. Insurance companies went up. People made a lot of money. We are expecting another one this July. However, because of the Dangote IPO, if it's going to list by that June to July, I'm afraid the rally may not happen at that time. Maybe it might happen later in the year. But long term, you cannot go wrong with Custodian. You see that Custodian? If you're not buying anything, buy Custodian. If you have bought some insurance companies before, but you are not sure because their head is shaking, like, this thing, head is shaking, sell it. Buy Custodian. If you are lucky to see this video on time at a good price, Custodian is a stock for the future. They also acquired FB Quest, a part of First Bank Merchants, and by the time they bring in that company with their own company, Custodian will be a blow up. Keep this video. When Custodian blows up, we'll come back to it. I think I would really like to come back to this video of Custodian because this is not a financial advice, but I'm very bullish on Custodian. And let's take a bet. Custodian will do well. Buy Custodian, keep it for 2 years, come back and give me a review. It's a solid play. It's not a volatile stock. They have money. They are making money. Their 2025 full year result was a blowout. I'm sure that their results for this 2026 too would be a blowout. It's a stock you can buy with peace of mind. Okay, we've spoken a lot about Custodian. This is my strategy in the stock market. I chase what people are not chasing. Right now, a lot of people are not chasing Custodian, and you should chase it and make your money. I hope you found this video helpful. If you do, please like, share, drop a comment. Put my thank you in the comment section. Thank you, Deborah. It's not easy to make research on a company. Sit with their books. Be bullish and come here and tell you. Right. If you are a dividend lover, in my next video, I broke down secrets to dividend paying stock that will blow your mind, like literally, no jokes. Click here, watch and enjoy. Thank you for watching. I'll definitely see you in my next one. Bye guys.